Let me bring to the show very quickly Daniel Gramza, President Gramza Capital Management. Dan, good morning. Happy Veterans Day, and thank you for joining us.
It's a pleasure to be with you, Alex.
Pleasure
Hope
to have you on the show, that's for
too.
sure. Happy you're working. Are you a workaholic or?
Well, the markets are open, so I'm going to be looking at the markets for a bit as the day progresses.
That's for sure, Dan. So where do we start? I mean, equities or precious metals, crude oil, because it's all, on the run. It's literally impressive. So let's start with the gold, which is certainly very interesting for our viewers. Let's take a look at the gold. We saw this major surge starting yesterday. Today it's up about 0.7% above the 1,800 mark, which is certainly a key level for the gold. Where do you see the gold, and how do you interpret these movements?
Well, what's interesting about it is its reaction makes sense. If you think about the idea of these inflation barometers that people are looking at, it stimulates gold. If we think about what does gold represent represents perception. It is an excuse, what I call an excuse market. So we have a weaker dollar. Well, we had a stronger dollar. Now, the weaker dollar can stimulate gold. Inflation, the perception of inflation, or the reality, either one can increase gold prices. What I'm looking for here, and today's action does surprise me. It's a little bit stronger than expected. We have pulled back, as you can see on that chart there in front of you. But my expectation for this market is by the end of this week for us to close near that 1890 level and possibly 1900. It goes back to perception, and I think right now that perception is carrying this market. So I do look for further movement to the upside.
Okay, this is very interesting. Do you think this is, of course, inflation-induced rally for the precious metals?
Yes, I do. I think your observation's right on target. It is the excuse that market needs to stimulate it. So inflation is increasing. Oh my gosh, where do we put money to protect that for us from inflation? The perception is that it's the gold market. And so we're seeing that kind of reaction. So it's not unusual in terms of what we're seeing, but you know what's going to be interesting, Alex? Will it be sustainable? Can it move up for the next few days? I think so. But will it be sustainable longer term as the market absorbs maybe that perception about inflation?
Another extremely interesting market is certainly the energy market, which is certainly a problem for the Biden administration and for the U.S. citizens, that's for sure. I was wondering, I know that you are a crude oil bear. Are you still a bear?
No, I'm not necessarily a bear, but you are right. For a long time, I was bearish on crude oil. But after this bounce we had from the lows, I'm not necessarily bearish on crude oil from a longer term point of view. I just don't think we really should be at these levels. And the reason is, what is our issue? Is the issue that we don't have supply, or is the issue that supply is not being released? So globally, is there enough crude oil? I believe there is. OPEC plus supplies about 45% of global crude oil. Is there more room for OPEC plus to increase supply? Yes, they can. And right now they're saying they're not planning on doing that, and apparently it looks like the Biden administration's not putting pressure on that, and maybe they are, and we just don't know it. But there is enough supply out there. We're seeing at these price levels, it now becomes attractive in the United States, if you're a producer of crude oil, to start considering exploration. We're seeing new wells being drilled. But the thing we want to keep in mind when people say, see, we got production increasing. Well, it's not production yet. It takes a while to get a well in line and producing. So yes, we are seeing an increase in that type of action, but it's because crude oil is above $70 a barrel. When we're above 70, we have a tendency to stimulate production in the United States, and I think that's what we're seeing right now. It's just, can we get enough supply released to abate some of the increases that we're seeing in prices, especially at the gas pump?
So do you think that the United States is going to ramp up production?
Well, I think there's a possibility we could. I mean, if you look at where we're producing, if you look at the Permian Basin in Texas and Mexico, New Mexico, the eastern part of New Mexico, those areas are producing, and we're seeing more and more transportation capabilities in terms of pipelines coming online. That is the big deal. It's not only to produce crude oil, but the ability to transport it. And I think that situation is improving in the United States. So I think the idea of us producing more and using it domestically actually is increasing. And we're also seeing an increase for U.S. crude in Asia, also in Europe. A lot of it's going to Asia right now in terms of our excess that we're producing.
Dan, I was wondering, I just wanted to have a very quick check on the three indices, kicking off with the Nasdaq Composite, which certainly suffered the major losses throughout yesterday's trading session, off about 263 points, 1.66%. And of course, we're observing a major bounce today when it comes to the futures, exactly to the Nasdaq, 0.8% higher in pre-market trading. Since it's extremely sensitive on inflation data, that's for sure. First of all, what's your target until the end of the year for the tech sector, which is, as we can see, continuously rising? And secondly, do you still believe that the inflationary pressures to the upside that we are observing and you are guys feeling, I guess, in the United States are still temporary / transitory?
Well, that's going to be the question. That's a good point that you're raising. Is it going to be transitory? Well, let's go back to the stimulus behind that. Is it that supply and demand? Is supply and demand in balance? Are we seeing some manufacturing slowing down because they don't have the parts or the supply to build it? But then when we look at supply, is it because we don't have supply, or is it because the supply is sitting on a ship and we can't transport it through our distribution systems? So it's a combination of those. I think that's having an impact. You asked about the NASDAQ market through the end of the year. 16,400 to 16,500, I think, is within reach by the end of the year, going back to those previous highs. And actually what we'd want to see by the close of Friday or the close of Monday is for us to be closing above 16,200. In the S&P, we'd want to be above 4680, 4690 by the close of Monday, let's say, for example. In the Dow, excuse me, in the Dow, we want to be closing above 36,300 by mid next week. In the Russell, the small to mid cap companies, 2470 would be the objective over the next couple of weeks for that market. So I think the upside potential is there. What's fascinating to me, Alex, is that are people willing to spend money? And the fact is, maybe it's still because of the pandemic, but people are willing to spend money, and they have money to spend. That's what we do see creeping into our economy in terms of people's sentiment, and also in terms of they're willing to open their wallet and actually spend that money. Not only on non-durable goods, but also on durable goods, things that last more than 3 years. So the demand is there, is the supply there? That becomes the other side of the coin.
So you are overall bullish when it comes to the equity markets. It doesn't matter which, of course, which is the sector specifically.
Correct. I am bullish.
And what's driving your bullishness?
I think it's a couple things. One, earnings. If you look at the earnings that we've seen reported, they've been, very positive. And so we're seeing that action, not only there in the earnings reports, but what does it do to perception? It keeps people feeling that, this market may be going up. Where do you put your money? What are the choices? Now, to get exposure to increase the return on your capital? Well, one of the places, it's the stock market. So I think that fuel to that market is still there. So we do have earnings that do support that. We also have this issue on supply. And if we can get that somewhat sorted out and calmed down by maybe, let's say, first quarter, maybe second quarter of 2022, I think that's also going to help propel the stock market. So right now, I don't feel this inflation data is going to cause a dramatic change in market direction. And the reason is the market absorbed that information, right? That's what you and I saw, a big drop in the stock market. So it says, oh my gosh, we have inflation. So it absorbed that report. So now it says, what's next? And I think what's next is for it to move back up.
So then, very final quick take. I was wondering whether you've reached your targets when it comes to the foreign exchange. So far, euro dollar 1.1469. Very interesting. Also, sterling against the dollar. This downturn trend for the sterling started last week, of course, after Bank of England kept interest rates at the current levels. It didn't raise rates what actually it had promised. And of course, I'd like to ask you. This is a question of our viewers. Do you have a specific strategies that you're using when it comes to the foreign exchange?
I look at Japanese candle charts. I call it behavioral Japanese candles. It's something that it's my perception. I use candles in a different way, not just candle patterns, but the clues that may reveal to us based on the price action. And that's what I mean by behavioral Japanese candles. If we look at let's start with the euro. I mean, I think the euro and the other forex is behaving properly. If you look at the capital that flowed towards the U.S. dollar in yesterday's action, and its other currencies obviously reacted in the appropriate way. Today, I'm not looking for big moves in these currencies. So for the euro to cool off a little bit today, maybe even to stay above 114.50, I don't think that would be surprising. What's going to be interesting, I think, is how we go into this weekend. Do we see people staying short? Do we see people staying short these currencies? And do we see people staying long the dollar? And I think that's where it'll give us some real clues about what to expect over the next few weeks. In other words, if we close weak in the euro, if we close maybe at 114.20 or 114 even, if we had that kind of close, then it says people are willing to go home short that market into the weekend. If we see the U.S. dollar, let's say above 95, if we're above that level, it says people are willing to go home long the dollar. But if we see the opposite, if we see the euro now bouncing back up to 115.70 or 115.50, that would say that people aren't willing to go home short as we go into the weekend. Then it would also imply then on Monday and Tuesday of next week, I think we should get some insight there. So if we see a bounce on Friday for these currencies going up, let's say the euro, which implies profit taking, then Monday, the issue will be, do they follow through? If it's buyers coming in because it's cheap, then that means Monday should be an up day in these currencies. If it's people saying, I want to take profit going into the weekend, then Monday should be a down day in the euro, for example, and an up day in the dollar index. So I think the next few days can give us some insights in terms of longer term price action in these currencies.
Thank you very much. As always, Dan Gramza, President Gramza Capital Management. Have a great day and talk to you very soon, Dan, hopefully.
Thank you, Alex. You too.